Good evening, everyone. Thank you for being with us on our Q4FY21 earnings conference call. Please note, effective 1st February 2021, the life science ingredients business stands demerged into Jubilant Ingrevia Limited and has been classified as discontinued operations in the results. I would like to remind you that some of the statements made on the call today could be forward-looking in nature, and a detailed disclaimer in this regard has been included in the press release that has been shared on our website. On the call today, we have Mr. Shyam Bhartia, Chairman, Mr. Hari Bhartia, Co-Chairman and Managing Director, Mr. Arvind Chokhani, Group CFO, Mr. Pramod Yadav, CEO Jubilant Pharma, Mr. Marcel Vetro, CEO Jubilant Biosys, Mr. Syed Kazmi, CEO Jubilant Therapeutics, and Mr. Arvind Sharma, CFO Jubilant Pharmova. I now invite Mr. Shyam Bhartia to share his comments. Over to you, sir.
Thank you, Hemant. Good evening to everyone. I hope you all are in good health and keeping safe. With the demerger of LSI into Jubilant Ingrevia, effective February 1, 2021, the company's consolidated results for Q4 FY21 include only 1 month of LSI business, and consolidated results for FY21 include only 10 months of LSI business. For FY21, our continuing operations, despite COVID-19 challenges, revenues were stable due to diverse range of businesses. CDMO and generics grew. We saw impact on radiopharma and had production impact at the Nanjangud API plant. Specialty pharma segment, especially radiopharma, was impacted due to COVID-19 and competition in radiopharma. We continue to maintain majority market share in our products and have long-term contracts in place. In radiopharmaceuticals, we are expanding our product pipeline with strategic partnership and have begun to execute a detailed turnaround plan of radiopharmacy business. CMO and generic delivered strong growth, and we plan to expand in CMO and enhance number and complexity of products under development in generics. Contract research and development service business witnessed strong year-on-year growth in revenues led by healthy demand from customers. We are doubling our chemistry research capacity that should commission by Q2 FY22. Despite COVID-related lockdowns, we have been able to ensure continuity in most of our manufacturing operations across all business segments, while at the same time ensuring safety of our employees. I take this opportunity to thank all our employees who have worked tirelessly across all our plants and offices to ensure continuity in company's operation, while continue to serve our global customers. With this, I hand over to Pramod to discuss the pharma business.
Thank you, Mr. Bhartia. A very good evening to all of you. Pharmaceutical revenue was at rupees 1,486 crore versus rupees 1,483 crore in Q4 FY20. The radiopharma was impacted due to lower procedures, especially related to lung scans due to COVID-19 and competition. And despite the competition, we continue to maintain majority market share and have long-term contracts in place. The decline in procedures and increase in competition has impacted growth and EBITDA margin in both radiopharmaceuticals as well as radiopharmacy business. The majority of impact is due to reduction in procedure related to COVID-19, where we expect a gradual recovery. And regarding Ruby litigation, the company received a favorable and unanimous judgment from the United States Court of Appeals summarily affirming Jubilant's earlier favorable ruling from the U.S. Patent Office and U.S. International Trade Commission. These two rulings by the appellate court have denied the appeals filed by Bracco Diagnostic. We are further enhancing marketing and business development efforts for RubyFill in the U.S. and expect ramp-up of installs starting Q4FY22 if the COVID-19 situation continues to improve. The RubyFill was commercially launched in Europe in Q3FY21. We are expanding the distribution network for RubyFill in Europe. We continue to build a long-term pipeline of radiopharmaceuticals, including generics, as well as proprietary products being used as diagnostics, therapeutic, theranostic, and the devices via in-house R&D, as well as strategic partnerships with key nuclear medicine companies. We expect one product launch in radiopharma in FY22. We are executing a detailed turnaround plan for the radiopharmacies to grow top line strongly with new customer wins, expand network to serve newer geographies, and enhance cost and procurement efficiencies. Energy business volume had normalized to 100% pre-COVID level during Q2 FY21, though came down again in Q3 FY21 and remained at 90 to 95% of pre-COVID level during the rest of the year due to enhanced restrictions. This running quarter, we are seeing them back to pre-COVID levels. CMO business revenue grew based on strong demand from customers as well as COVID-related deals. And against rupees 500 crore in the revenue indicated earlier from 5 CMO deals signed in FY21, we realized around rupees 535 crores. In FY22, we expect these deals to contribute to further revenue of approximately rupees 200 crores. We have announced expansion of Spokane site via addition of high-speed injectable fill and finish line with isolator technology, which will enhance its capacity by 50%. We expect to bring it under commercial operations by end of calendar year 2024. We successfully completed safety and pharmacokinetic absorption studies in animal and healthy human volunteers for novel oral sublingual formulation of remdesivir. The EBITDA for the quarter was at rupees 366 crore as compared to rupees 429 crore of Q4 FY20. In March 2021, our Spokane facility was inspected by US FDA with 0 observation. US FDA also inspected Roorkee site in March 21 and made observation related to manufacturing controls and systems. The company is closely engaged with US FDA to ensure resolution. And the Nanjangud API manufacturing facility has already completed remediation measures with respect to official action indicated issued by the US FDA. We are awaiting US FDA inspection. We are confident that our remediation efforts and engagement with the US FDA will soon resolve the OAI and the warning letter status for our 2 manufacturing sites. With this, I hand over to Marcel to provide insight into contract research and development services businesses.
Thank you, everyone. Our contract research and development services business under the Jubilant Pharmova brand continues to deliver a very healthy performance during Q4. This was driven by strong demand from biotech companies for our integrated discovery as well as functional services such as chemistry, scale-up, DMPK, discovery biology, and clinical trial data management support through our TrialStat brand out of Canada. The business has a healthy pipeline of new contracts and customer acquisitions for fiscal 22. Our Q4 fiscal 21 revenue as well as EBITDA grew by 25% year on year. Fiscal 21 revenue grew by 21% year on year, and EBITDA grew by 27% year on year. As we informed in the previous quarter, the business has committed investment to double its chemistry research capacity in Greater Noida. The project is progressing well despite some headwinds due to the pandemic surge, and we expect the facility to be ready Q2 of fiscal 22. With this, I now hand over to Syed to discuss the proprietary novel drugs pipeline.
Thank you, Marcel. Good evening to you all. In our proprietary novel drug business, we are developing a pipeline of first-in-class and best-in-class agents to deliver precision medicines focused on addressing unmet medical needs in the area of oncology and autoimmune disorders. We are also leveraging our industry-validated drug discovery platform to identify novel promising assets and move them from discovery to development on an accelerated timeline. Our first-in-class LSD1 and HDAC6 dual inhibitor addresses multi-billion-dollar market segments in hematological malignancies and solid tumors, and is undergoing investigational new drug IND studies with a goal to file IND and initiate first-in-human clinical studies in the second half of FY22. Two more programs are following this lead. A first-in-class PAD4 inhibitor targeting autoimmune disorders such as rheumatoid arthritis, and a best-in-class PRMT5 inhibitor, which uniquely shows both blood and brain exposure and therefore can address blood-based tumors like leukemia and lymphoma, and brain tumors like glioblastoma and brain metastasis. IND filings for these two programs are planned over the next 12 to 15 months. So the U.S. business market, biotech market, is witnessing very strong investor interest in precision therapeutics in oncology and autoimmune diseases based on the recent equity raises at attractive valuations. In our proprietary novel drug business, we are developing very high potential and first-in-class assets in these areas. 4 of our assets, as I mentioned, under development are at advanced preclinical stage and would transition to the clinic starting early next year. The company is working towards creating shareholder value in this business through a private and or public equity raise during the coming 18 to 24 months. With this, I now hand over to Arun to discuss the financials.
Yeah, thank you, Syed. A very good evening, and I thank everyone for taking out time and joining us on our quarterly earnings conference call. I would like to highlight the company's financial performance during the quarter and full year ended March 31st, 2021. As mentioned earlier, as the LSI business trends demerged from Jubilant Pharmova effective February 1st, 2021, I would cover performance of our continuing business, which includes pharmaceuticals, contract research and development services, and proprietary novel drugs. So first, Q4 21 financials. Revenue from operations during the quarter was at 1,580 crores as compared to 1,568 crores in Q4 last year. Pharma revenue was at 1,486 crores versus 1,483 crores in Q4 20, while contract research business reported revenues at rupees 94 crores as compared to 75 crores during Q4 20. Reported EBITDA during the quarter was at 381 crores as compared to 455 crores in Q4 FY20, with margins at 24.1% versus 29% in Q4 FY20. Depreciation and amortization expense during the quarter was at 86 crores versus 98 crores in Q4 20. Finance cost during the quarter was at 43 crores versus 47 crores in Q4 FY20, a reduction of 8% year on year. Average blended interest rate for Q4 FY21 was at 4.82% as against 5.33 in Q4 FY20. This reduction in interest rate was mainly on account of replacement of 4.875% bond with substantially lower cost term loans. Reported PAT during the quarter was at 173 crore as compared to 212 crores in Q4 last year. EPS for Q4/21 is at 10.9 per share versus 13.3 per share in Q4/FY20. Now I will cover for FY21 financials. For FY21, revenue was at 6,099 crores versus 5,976 crore in FY20. Pharmaceuticals revenue at rupees 5,790 crore versus 5,714 crore in FY20. Contract research and development services revenue was recorded at rupees 305 crores against 251 crore in last year. EBITDA for the full year was at 1,414 crore for FY21 versus 1,585 crores for FY20. Coming to depreciation amortization expense for FY21 was at 349 crore versus 340 crore in FY20. Finance cost at 184 crores versus 200 crores in FY20. That for the full year was at 574 crores versus 670 crores in FY20. Average blended interest rate for FY21 stood at 5.07% as against 5.39% in FY20. We continue to focus on deleveraging, and I'm glad to mention that during the year, company reduced its gross debt to rupees 2,600 crores from 3,361 crores as on March 31st, 2020. Jubilant Pharma Limited in March 2021 redeemed the principal amount of $100 million out of 300 million senior notes due 2021. This is in addition to $100 million that was redeemed by company in January 2021. With these two transactions, the company has completely redeemed the $300 million senior notes that were originally due in October 2021. Out of the total redemption of $200 million between January to March 2021, we have refinanced $150 million and remaining $50 million was paid out of company's cash balance. The company's net debt on a constant currency basis stood at 2,018 crores, a reduction of 219 crores as compared to March 31st, 2020. We continue to have a strong cash position and expect to generate healthy operating cash flows during the year. Capital expenditure excluding R&D capitalization was at 276 crores for the full year. For FY22, we plan to spend around 700 to 800 crores in that range. With this, I would like to conclude our opening remarks. We will now be happy to address any questions that you may have. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sayan Mukherjee from Nomura. Please go ahead.
Thank you and good evening. Sir, my first question is on Radio Pharma. Can you share what is the decline in Radio Pharma in fiscal 21? And at this point in time, what is the level of activity in terms of procedure versus the pre-pandemic levels? And also some comment on competition in MAA as to what is the level of pricing and market share loss that you've experienced. Thank you.
Hello, this is Pramod here. As you mentioned, we had an impact for the Radio Pharma business because of two reasons. One is the competition, as you rightly mentioned, MA, and the other one is due to COVID. In overall impact, the contribution of the competition is much lower than the impact because of COVID, and that is because the entire diagnostic procedures had come down quite a lot, and especially our two products got more impacted, which are MA and the DTPA, because they are used for the lung ventilation and the perfusion, where the patient has to breathe in and breathe out many times. And that during the COVID-19 pandemic situation was not considered very safe. Now, as the COVID-19 in US situation is improving, we are seeing that the overall number of prescriptions what we dispense from our radio pharmacy business, especially in the recent past, the last about a month or so, has come back to the pre-COVID levels. But however, for the lung procedures where the most of the patients and the physicians have shifted to the alternate routes, there we are seeing that the recovery could be little slow. We are also watching the situation, and we expect that the recovery should pick up. But that's where we are currently.
Any percentage, any level you would like to share? Like, is it 50% lower, 60% lower, or higher compared to the pre-COVID level? Like, what level approximately as far as lung procedures are concerned?
I'll say out of MA and the DTPA was impacted much more. For the DTPA product, at one point of time, the number had gone down as low as about 20% of the pre-COVID level, which now is at about 50%. On MA, the impact was not as sharp as the DTPA, but that was also impacted. And we expect that that should also start recovering. But the rate of recovery we have to watch.
Okay, sir. And so you mentioned, is there a possibility of a permanent damage in this market because of the pandemic? Because you mentioned about some alternate procedures. Is that a risk that you see?
See, the alternate procedures is not as accurate or is not as precise as the physician would like to see them, especially for the lung imaging. So yes, there could be some impact, but we expect it will be short term, not long term.
Okay, thank you, sir. And my second question would be around the CMO business. Again, so here you did mention about COVID-related upside that we can get. Also, I think you talked about 3,600 crore of pipeline, which will be executed over 3 years. Now, so so this is like certain. I mean, this number looks pretty much on the higher side. So if you can give more color as to what constitutes this pipeline, and are we going to see healthy double-digit growth in CMO from here on?
The FY21 was a good year for the CMO because of these 5 deals which we did, which we indicated earlier that could bring a upside of about 500 crores, but ultimately it brought even more, and we did about 535 crore in FY21 on those 5 deals. And those deals are still continuing, and we expect that they will be generating about close to 200 crore revenue in FY22 as well. And other than these COVID-related deals, the other products also continues to grow. But you will see some swing into the CMO revenue in FY21 versus 22. And in 22 also quarter on quarter, because these deals are the specific deals. The order book which we indicated is the visible order book, which is already there. And we have been saying that we have debottlenecked the capacity. And the customers, we had the higher demand from the customers. So we continue to use the capacity. And that's why we are going ahead and doing this expansion, which we announced that we are putting another line and increasing capacity by 50%. This expanded capacity is not factored into this order book what we mentioned. So when that expanded line will come, that will be on top of this.
Thank you, sir, and I will join back in the queue.
Thank you.
Thank you. The next question is from the line of Alankar Garude from Macquarie. Please go ahead.
Hi, good evening, everyone. Sir, generic sales have come down quite a bit on a sequential basis. Lower remdesivir sales could have been one reason, and you also mentioned about higher price erosion in the US. So can you elaborate on that?
So one reason you have already identified correctly that in Q4 there were the lower sales for the remdesivir because the number of cases in India has gone down quite a lot, and also into the other countries for which we have the licenses. So that had an impact. And in the US for some other products where we had the positions, we have seen some competition coming up. And then to retain the volumes, we had to take some adjustments in the pricing.
Sir, now you also talked about new launches through in-licensing and contract manufacturing. So what are the number of new launches which you are planning in US in FY22? And broadly, this business has grown pretty strongly if I look at, say, the 9 months FY21 and this quarter was steady. So how should we look at growth in this business in FY22?
Since our the Roorkee plant currently is in the warning letter and we have the demand for the products. So some products we are launching through CMO or in-licensing route, and we expect that we should be launching somewhere between 3 to 5 products in this financial year. And as soon as the warning letter is lifted for the Roorkee site, we have many ANDAs in the pipeline. Those ANDAs we expect to get the approvals, and then we'll immediately start launching the products. So overall, I see for the generic business from FY23 onwards, there will be quite a good uptick again. For FY22, probably we will be more or less at par with FY21.
Understood, sir. And sorry, just one follow-up on this. Salisbury, the capex has been completed?
Yes. So that capex is getting completed in this quarter. Some of the capacity has come up, and we have started utilizing that.
Understood, sir. Sir, my second question is, if you look at the capex guidance, that seems quite steep. I understand that FY21 was abnormally low because we did some reprioritization during COVID times. So is it possible to break this capex across the key areas? And is the $92 million capex which we outlined in Spokane, is a large part of that going to happen in FY22?
The large part of that 92 million capex will happen over next 2.5 years. Not in FY22 alone. But we are also doing expansions. I mentioned about radio pharmacies, where we are going ahead aggressively to grow our top line and also expanding. Plus, we are also remodeling our existing pharmacies, which will lead to the higher operational efficiencies there. And also will lead to some of the network optimization where some of the pharmacies will start operating with hub and spoke models. So some capex is going towards that. And rest of the capex is for all the businesses. We are also expanding the capacity for API through the debottlenecking. So some of the investment is going there also.
So would it be fair to say, sir, that a large part of this 700-800 crores is going towards the radio pharma business?
Sorry?
Would it be fair to say that a large part of this capex is going towards radio pharma?
I'll not say large part. I'll say radio pharma is also contributing to that capex.
Okay. And so in this context, do we expect to generate free cash flow in FY22?
Yes, we do expect that.
Yes.
Okay, fair enough, sir. Thank you and all the best.
Thank you. The next question is from the line of Sriram Basi from ICICI Securities. Please go ahead. Sriram, your line is unmuted. You may please go ahead with the question.
Yeah, thanks for the opportunity. So my first question is particularly, any update on the application for the oral remdesivir that we have been trying to get approved?
We are continuing the human studies as of now, and we are also engaged with the regulatory authorities for the approval. And beyond that, as of now, we will not be able to comment much. But our the human studies are continuing.
Okay, got it. And on the COVID-related CMO deals, we got around 535 crores last year and 200 crores this year. That is like one-time kind of contract, right? Or can there be additional revenue which may come later in FY22 or FY23?
See, that all will depend upon how the COVID-19 situation evolves. And there are so many uncertainties around it. So when the customers are committing the volume to us, they are also committing little cautiously.
Okay.
So the numbers which we have indicated is for the volumes which are committed, and then we have to watch how the situation evolves.
Right. So, does this also include any manufacturing for the vaccine?
So we said that there are 5 COVID-related products. Now, in that, some could be vaccine, some could be therapeutic or the prevention.
Sure. And next question is on, is it possible to share how has been the revenue growth or revenue numbers for the API business and allergy therapy products?
For the allergy, I mentioned that during the year that business was also impacted, and there was some up and down into that, and it was operating at about 90 to 95% of the pre-COVID level for most of the time. Now that business has come back to the pre-COVID levels because now in the US the situation has improved. And other than that, in that business, we are doing 2 things. One is that for the venom, as such, we have seen within the US the penetration level is low. And there's a scope or the possibility to grow the venom market within the US almost 3 to 4 times with more education and creating more awareness. Plus, for our products, venom as well as non-venoms, there's quite a huge potential outside US, which we had not been focusing earlier because we had the limitation on the capacity. Now that limitation has been taken care of, so we are aggressively targeting to grow those volumes outside the US as well. So the allergy business will continue to do well. With regard to API, you are aware that in FY21 for initially 2.5 months our plant was down. And in spite of that, we have done quite well in that business. If the plant was not down, we would have grown much more into the API. We still see the traction. We have a good order book in the API as well. That's why we are debottlenecking the capacity. Hopefully, in India, the COVID situation should continue to improve, and it should not impact the operation.
Okay. And lastly, on radio pharmacies, is it possible to share? Because I think you mentioned that we are expecting the break-even probably next 2 to 3 years. So how much loss it would have incurred this year, FY21, in terms of EBITDA?
See, we mentioned earlier that we are not treating this business as a separate standalone business because it's merged with the radio pharmaceuticals under one brand of the radio pharma. But however, we are seeing there is a scope, quite a lot of scope to grow our top line there, and to also have the operational efficiencies, which I talked about. We are doing the remodeling of the pharmacies, and that will help us to bring down the cost. We are also looking at procurement efficiencies. So even if we treat that as a standalone business, we don't think that this business will continue to bleed more than 2 years.
Okay, sure. Thank you. Yeah.
Thank you. The next question is from the line of Rahul Veera from Abacus. Please go ahead.
So just a quick question. In terms of remdesivir and the pricing erosion on the Valsartan part, what would you attribute the lower EBITDA margins this time?
Both had the impact because the Q4 quarter for India was quite good in terms of the number of cases being very low. So there was hardly any demand for the remdesivir. So that had an impact. And plus, we had mentioned that there was also pressure on the sartans pricing.
Okay. So, sir, in the medium to long term, assuming radio pharma, the business comes back in terms of footfalls in the hospitals. So will we come back to 20 to 30% margins broadly in the pharma segment?
I would say that the long-term strategy what we have in place, that's very rock solid. And the way we are growing the business, the way we are planning the business turnaround on the pharmacy side, the way we are planning the business for radio pharmaceuticals, we had mentioned that we have a product pipeline. We are building up very good portfolio with many of the proprietary products. We are also bringing therapeutic products into it. We are doing quite a lot of innovation on the device side. And we are also expecting that our NDA MIBG will get launched in another about close to 2 years time frame. So with all that happening, the overall EBITDA margin in the pharma over the next 3 to 5 years is going to be very healthy.
Sure. Sir, and just wanted to understand, like in terms of WHO has already removed the remdesivir from its list of recommended drugs for COVID. So further investments in the oral remdesivir, what's your take on that?
So the product is still approved in the US as well as in India. It is used for the emergency use. The way the COVID-19 uncertainties are there, India just went through a horrible time and the situation still has not improved. So there is a demand of the product because the product is working well and the doctors are prescribing. For intravenous, everybody has to have access to the medical system, hospital system. whereas now the COVID is going into the villages also, into smaller towns where everyone is not having access to intravenous, and that's where we are positioning this oral sublingual formulation, which patient can take at home under medical supervision and need not to go to hospital.
Sure. And so the new Radiopharma project product that they're going to launch, is it like going to create some synergy with the DTP MAA, or can there be some cannibalization of the existing products?
No, it will not be cannibalization of existing products. These are the different products which have their own market and own market potential. So that will be the growth over existing revenues.
So what will be the market size?
For the products what we have in the pipeline, in our own R&D, they have a market size of close to 300 million. And our NDA, the MIBG, will have the market size or the market potential of another close to 200 million plus. So this is for the products which are already there in the pipeline. Plus, we are also now doing a lot of the partnerships and the strategic deals. So we just made investment into Sophie, which we announced. We also announced our strategic relationship with Isotopia, and plus one or two more we announced. There are few more into the pipeline. All that, the strategy is emerging, and that will be on top of this extra.
Sure. Right. Fair point, sir. Thank you so much. I'll come back in the queue, sir.
Thank you.
Thank you. Any participants who wish to ask a question, they may please press star and 1. The next question is from the line of Tushar Manudhane from Motilal Oswal. Please go ahead.
Sir, just on the CDMO order book, I would like to understand this, while it is serviced over 3 years, would it be like more front-ended, back-ended? How to look at it?
You can safely assume it will be more or less uniformly spread over 3 years, because the plant is running close to capacity.
Okay. And even in FY21, let's say if I exclude the 5 CMO deals related business, we were more or less flat, maybe, and then incrementally 200 crore for FY22. And if it is to be spread across the 3 years, so 1,200 approximately every year. So, but then on the base business of 1,500 crores, how does that move?
So the COVID-related revenue will come down if the the overall pandemic situation continues to improve, and that's what the expectation is. But then other products' revenue will continue to increase.
Okay, sir. All right. Thank you. That's it for now.
Thank you.
Thank you. The next question is from the line of Pratik Kothari from Unique PMS. Please go ahead.
Good evening, sir, and thank you for the opportunity. So my question is on our R&D pipeline. I mean, if we look at this year, we have spent about 200 crores, but we have not made any filing, neither have we gotten any approval. So just your thoughts on which area are we focusing on? What does our pipeline look like, and what would be our filing be going forward?
One is that there is quite a lot of the R&D expenditure has shifted from the generics to the specialties for the radiopharmaceutical business, where we mentioned that there are the products in the pipeline, and we are expecting at least one launch in this year. There will be about at least 2+ launches probably next year. So they all are coming. Plus, on the generic side, we have also moved up into the value chain, and instead of focusing on the vanilla generic product, we are working on the complex generics or even the innovative generics within that the business. So that the development also takes a little time, and that's where the investment is happening. But those pipelines are there in the R&D.
So is it fair to assume that in the near future, at least, our growth maybe for the next 1 to 3 years will come in from the products that we have already filed and gotten an approval from, like we launched Repeatfield in Europe and planning to expand there. So you mentioned next year, or rather this year, we are launching one more product in the US, which I believe will be from a product we have already filed and approved. So near term will be from the products that we have to optimize it, to grow it, to scale it, and maybe 2-3 years down the line, we'll see some new contribution from newer products.
If you're talking about the generics, then I will say that once the rookie warning letter is lifted, many of the ANDAs in the pipeline will start seeing the approvals, and they will start launching the products. But other than that, there is a huge focus and opportunity for us to launch the products in the non-US market, and including pharma emerging markets, because we have already quite a good product basket. And in those countries, we have done many of the filings, and we are getting the approvals, and we are going to launch the products. So we'll continue to grow revenue into the US market as well as non-US market. And about Radio Pharma, this one launch we are seeing, we have already filed the ANDA. We are expecting approval and then launch the product. And the other products which we'll be launching next year, for then the ANDAs are very close to filing stage.
Fair enough. And so this last question on the specialty side, now that most of the restrictions have been uplifted in US, so we are seeing our volumes or walk-ins as what we used to see pre-COVID on our radio pharmacy and allergy business.
So I mentioned in radio pharmacy and the allergy business, we are back to the pre-COVID levels. And in radio pharmaceuticals, we mentioned in our speech that we will be ramping up now the RubyFill installs, because now the travel restrictions, etc., have eased out. So we will be starting quite a good ramp up of the installs, and not only in US, also outside the US, we got approval in the Europe, and in fact we launched the product into the Europe. We are also engaging distribution network into the Europe, and plus other products which had gone down as the number of prescriptions which are getting dispensed are coming back to normal. So we will also see the uplift over there for the radio pharmaceutical products.
Mm-hmm. And sir, if you can quantify how severe or light has been the increase in competition on our radio pharmaceutical business. We had highlighted this a couple of quarters back, that a new player has come in and that might affect something, and we are seeing a bit of effect, at least in this quarter, in terms of margins. So, how severe or light is that?
So you mentioned earlier that whenever in this business a generic player comes, you have to give up close to 20-30% market share. And I'll say that what market share we gave up is on the lower side. And you have to make the minor adjustments into the pricing. So the price adjustment also had not been very substantial. We got more hit because MA, as I mentioned, is used for the lung along with the DTPA, and that the diagnostic procedures had gone down substantially as the hospitals were not taking risk for their staff. You can imagine
a COVID-19 patient comes into the room and breathe in and breathe out multiple times with a good force. So that's not safe for the staff as well as the entire the area over there.
Thank you, Mr. Kothari. Request you to join the queue for any follow-up as there are several participants waiting for their turn. Also, a reminder to our participants, if you wish to ask a question, please press star and one. The next question is on the line of Amish Kanani from JM Financial. Please go ahead.
Yeah, hi, sir. Sir, if you can just give us a perspective on, the cash and the net debt on the book. I see quite a bit of debt repayment also happening, and cash and cash equivalent, I think, is about 500 crore plus, 9 months are correct. So in that context, sir, also the question is, given that we are also, a free cash operating generation company net of capex, how would you, give us some idea about the dividend distribution payout that, we can expect over a medium term? Thanks.
So your first question was on the debt repayment. So we had quite a healthy cash at the beginning of the year, and we generated good amount of cash for this year also. So we used almost $95 million to reduce our gross debt. So that's our gross debt has gone down by $95 million. And now as of this year and March 31st, 2021, we are keeping a cash of around $70 million. That will be used for our expansion and our related activities. And we have a very, second question of dividend policy, we have very well laid out dividend policy, and we follow that policy very religiously.
Yeah, so sir, I think if I'm not mistaken, a dividend of rupees 5 on an EPS of 35 looks slightly low given our position on the debt. And so that was the question. Are we quantifying the in percentage terms, or is there any revisiting of those policies? If at all, you can give some idea, that will be helpful.
No, policies is just like we'll be declaring same dividend what we declared last time also. So it is a same dividend we're continuing for this financial year also.
Thanks. All the best.
Thank you. The next question is from the line of Sayan Mukherjee from Nomura. Please go ahead.
Yeah, thanks for the follow-up, sir. Sir, can you, give some more color on the radio pharmacy? FY20, the business was loss-making. I would assume it has increased this year. When you say aggressively growing, Jubilant was already one of our large players, I think the second largest player in the US. So what exactly you mean to grow aggressively, given that you are already a very dominant player? If you can give some color on both top line and also on the cost side, which will help improve the profitability of this business.
So you are right in saying that this year the loss may have gone up, and that is because of the COVID. Number of prescription dispensing was lower than the pre-COVID level, and with the fixed cost remaining more or less same, so the contribution goes and hits EBITDA. So that's what was happening in FY21. Now we are seeing that market has recovered. The number of prescription or the dosage which we are dispensing is back to the pre-COVID level. So we were the second largest, but there was a gap between number one and number two. And we still do not have the presence in all the major cities where you have a large population. We are covering close to 60 to 70% of the hospitals, but we still have room to grow and expand, and that's what we are doing. So we are looking at expanding and getting into the new geographies, and through the hub and spoke model, etc., which I talked about, We are also looking at expanding the coverage into the existing areas and go more deeper in a focused manner and grow our market share. So quite a lot of work on that has already happened, and that's what we are going to pursue aggressively.
Anything on the cost side which will bring down the cost or increase profit?
So one is that you operate on hub and spoke model, then your cost comes down. I talked about that we are doing the modernization into the pharmacies by which our efficiencies for the dispensing more doses from the same vial will go up. So you will save in terms for your vial cost. We are also looking at saving overall the transportation by optimizing the entire transportation module. We have identified opportunities into procurement, and that cost we are bringing down. So in a very focused manner in that business on all the areas we are addressing, and we still plan to continue to grow the top line in that business.
And sir, at a steady state, what kind of EBITDA margin the pharmacy business will be able to achieve?
At a steady state, the EBITDA margin should be in high single digits.
Okay, sir. Thanks a lot for that, sir. And sir, just one other question on the proprietary development that you're doing in innovation. Are there any plans of monetization, fundraise at this point in time, and at what stage and how far we are from that stage to monetize any of those assets and programs that you're running there?
In radio pharma business, we do not have any plan for the monetization.
Innovation research work that you're doing, sir.
So that is question to Syed. Sorry. Syed?
Yeah, sure. So this is a two-pronged strategy in terms of quote-unquote monetizing. So the first one that we have kicked off is to really, pursue private equity raise with a goal to get the proceeds that will fund clinical trials, additional IND filings, and lead optimization of next generation oncology targets that we're developing. And in addition to the external funding, we are also exploring and continue to do so partnering opportunities with large pharma and biotech, similar to what we have done, as you may know, with our prior partnership with Checkpoint Therapeutics and Lembo Therapeutics on some of the innovative assets, except that we would rather go through the partnership at the right inflection point, say after IND filing or clinical proof of concept, to maximize the deal value.
Okay. And so this private equity fundraising, when do you expect that?
Right now, we're looking, our target is by third quarter FY22.
Okay. Okay. Thank you, sir.
You're welcome.
Thank you. Ladies and gentlemen, that was the last question for today. I now have a conference over to the management for the closing remarks. Thank you, and over to you.
Thank you, everybody, for joining the call. If you have any further questions, Pramod and Arun will be happy to answer. Thank you so much.
Thank you very much. Ladies and gentlemen, on behalf of Jubilant Pharmova Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.